everyone. Thank you for tuning in. Let's start today's topics. Magnite's ad serving platform, SpringServe, recently announced their inclusion in Amazon's Amazon Publisher Services Ad Server Certification Program. Specifically for streaming TV, this new initiative is meant to help publishers to limit repeat ads, increase monetization potential, and make the advertising process smoother overall, now that SpringServe and Amazon Publisher Services have joined forces. Working with TV ads will be a piece of cake. The easy cash era is over and its impact is only just being felt by world markets yet to see the end of the sharpest interest rate hiking cycle in decades. Risks were brought to a fore this week as U.S. tech specialist Silicon Valley Bank, SVB, scrambled for fresh capital, sparking a rout in bank stocks. SVB was seeking funding to make up for the sale of a $21 billion loss-making bond portfolio, a result of surging rates. Central banks, meanwhile, are shrinking their balance sheets by offloading bond holdings as part of their fight against hot inflation. We knew our days of easy cash were numbered, but we didn't think it would be this soon. Tesla is facing 3 allegations filed by the Association for Nature and Landscape in Brandenburg over concerns associated with Gigafactory Berlin. The charges are related to Tesla driving foundation piles possibly affecting groundwater, the lack of supervision and control by District Deputy Sasha Gem, and the alleged lack of permission for a Tesla Sud Work shuttle station. Tesla has not yet responded to the request for comment. It appears that Tesla's efforts to get ahead haven't gone unnoticed. Tesla has seen its stock plummet in the last 12 months, and its most drastic week was the end of last year when it dropped 18%. Chief Executive Elon Musk was recently back in the news stemming from his criticism of a laid-off Twitter employee. Musk later apologized to the employee, but the news makes investors cautious when considering Tesla stock. The EV maker's Investor Day was also widely criticized for teasing a future inexpensive Tesla without a useful production timeline or other details. Tesla stocks may as well rename itself Musk controversies, since the company's reputation these days is becoming a bit too dependent on its CEO's shenanigans. NIO entered the electric vehicle market by following the time-tested strategy applied by Tesla in its early days: develop and launch a high-end luxury vehicle whose sales could boost the operating capital to develop a lower tier of models. NIO has then looked to undercut its biggest competitor bid in the space by sparking price wars on its vehicles' price tags to boost market coverage. NIO has allowed discounts of up to 100,000 RMB, leading to a 22.4% discount from the average selling price. Year-over-year, NIO has exceeded expectations, delivering 34% more cars and achieving a 13.6% gross margin. Looking ahead, NIO has forecasted 31,000 to 33,000 vehicle deliveries in the first quarter of 2023, doubling its plant and equipment size to accommodate a 50% capacity utilization rate. Analysts are expecting a 25 to 35% increase in sales on a quarterly basis, with a 115% upside on the stock. So, who needs another electric car company, right? Apple shareholders on Friday rejected 2 proposals from conservative US focused on scrutinizing the company's inclusion and diversity policies and its ties to China. Shareholders approved the company's executive pay packages, with CEO Tim Cook's pay made more dependent on stock performance apparently, when it comes to shareholder proposals. Apple Inc.'s shareholders prefer to focus on financial success over social progress. Ford Motor is reorganizing its European car production lineup with the elimination of 1,100 jobs at its plant in Valencia, Spain. Ford has notified its union partners and is striving to reduce the impact of the job separations on employees, families, and the local community. Ford is aiming for a successful transformation of the European arm of its business. Ford Motor must be proud of its recent move to eliminate 1,100 jobs from its Valencia plant in Spain, while they strive to maintain a positive narrative of transformation in Europe. This is everything for now on the Wall Street wackiness. See you in another time.